For some entrepreneur, buying an existing business represents less of a gameable than starting a new business from scratch. While the opportunity may be less risky in some aspect, you must perform due diligence to ensure that you are fully aware of terms and purchase. If you have decided to buy an existing business, you want to be sure that you are making the right choice in your new venture. Let's look at some advantages of established business. If you get it right, there can be many good reasons why buying a new existing business, which could make you good business. Remember, through that you will be taking a legacy of previous business owner. It may be easier to obtain the finance as a business will have a proven track records. A market for the product or service will have already be demonstrated. There may be established customer, a reliable income, a reputation to capitalize and build on the useful network of contacts. Business plan and marketing methods should already be in place. Existing employees should have experience and you can draw on. Many of the problems will have been discovered and solved already. After studying advantages, now have a look at disadvantages of the same. You often need to invest a large amount up front and will also have a budget for professional fees for such as accountants, etc. You will probably need several months worth of working capital to assist with the cash flow. If the business has been neglecting, you may need to invest quite a bit more on the top of the purchase price to give it best chance for success. Now, you may need to honor any outstanding contracts the previous owner leaves in the place. You also need to consider why the current owner is selling up and how this might impact the business. It's possible current staff may not be happy with the new boss, or the business might have been run badly and staff morale may be low. Now, what are the steps in acquiring a business? Analyze your skills, abilities, and interests. Then prepare a list of potential candidates and investigate, evaluate, and explore financing options to ensure smooth transitions. It can be a legal obligation, but the term will more commonly apply to voluntary investigation. A common example of due diligence in various industries is the process that which a potential acquirer evaluates a target company or its asset for an acquisition. The process of investigation the detail of a company that is for sale to determine the strength, weakness, opportunities and threats facing it, the term as due diligence process. Now let's have a look at the questions. Why does the owner want to sell? What are the physical conditions and what is the potential? What legal aspects should be considered? Is the business financially sound or not? As we have talked about physical condition, then the physical conditions such as building which is located at which place, inventories, account arrangements, business records, intangible assets, location and appearance are some important factors. A conceptual set of qualities or characteristics capable of developing into an actual product. Typically, a product definition is formed based upon market research and other information, and then a prototype is created. Once reviewed, the prototype is adopted and accepted as a product model. Now, legal aspects are an part of successful business. They reflect the policy framework and mindset of government structure of that country. They ensure that every company is functioning as per the statutory framework of the country. Every enterprise must take into account the legal setup while framing the business aim and objective of the company. Financial soundness is judged on the basis of income statement and balance sheet, the income tax returns, owner competition and related cash flow. There are different methods to calculate value of a business. Business valuation is a process and a set of procedures used to determine what a business is worth. While this sounds easy enough, getting your business valuation done right takes preparation and thought. A business owner may believe that the business connection to the community it serves is worth a lot. An investor may think that the business value is entirely defined by its historical income. Next is balance sheet technique. There are some other methods such as excess earning method, capitalized earning approach, and market approach. To understand the seller, firstly pick the right buyer and handle that buyer by structuring your deal in proper manner. The way you're structuring the deal, then evaluate exit strategy and negotiate with the deal involved for that customer. Entrepreneurs live for the struggle of launching their businesses. But one thing they often forget is that decision made on the day one can have huge implication down the road. You can see it's enough to build a business worth a fortune. You have to make sure you have an exit strategy, a way to get the money back out. One favorite exit strategy of some forward thinking business owner is simply to bleed the company dry on the daily basis. Now, what are the factors affecting negotiations? A prospective employee may negotiate with his employer over his salary. A consumer may negotiate the price of the product with the salesman, and the management may negotiate with the worker union over work related issues. It is through negotiation that parties decide what each of them finally get and given in their relationship. The place of meeting for negotiation influences one level of confidence. The choice of time for holding decision should be fixed according to mutual convenience. The time should be adequate for smooth exchange of ideas through different stages of negotiation. Personal relationship. The conduct of negotiation is influenced not only by the real situation of the matter but also by the relationship between the two person or parties involved in the process of discussion. Now, before delivering into the various aspects of negotiation, it is important to understand conflict. Conflict and negotiation go hand in hand. Conflict means a serious disagreement or argument about something important. It's difficult to make a decision or a choice. Conflicts are an inherent part of business organization. Thus, to overcome this, always prepare and remember the difference between a position and an interest. Now, develop the right mindset. Always leave yourself an escape hatch. Keep your emotion in check. Sometimes it's better and best to remain silent. Thank you.